The Gwart Show is sponsored by Ellipsis Labs. Ellipsis Labs is building a world where mainstream finance happens on-chain. Their first product, Phoenix, is a fully on-chain limit order book DEX on Solana doing hundreds of millions of dollars in volume. I know this team personally. It's one of the strongest in the space. If you're interested in working with a team that's here to stay, Ellipsis Labs is hiring engineers passionate about DeFi to join their team. You can find Ellipsis Labs on Twitter at ellipsis_labs or head to ellipsislabs.xyz to learn more and apply. Hey guys, I'm here today with Walt Smith. Walt is also the producer's brother for my podcast, but more importantly, he is a friend and a venture capitalist, and we're going to talk about a lot of different things today. We don't have like very specific guidelines with this episode, but we've thrown out some ideas. So, Walt, if you want to introduce yourself.
Thanks for having me on, man. I'm a huge fan of your podcast. Listen to like every episode, and obviously love that you're helping out my brother since he's not the best at media. But yeah, I work at Cyberfund, which is like a family office in Europe that just does investing and some other stuff in the crypto space, but also in AI and kind of all over the place.
Yeah, I mean, if you want to give like a short 2-minute or maybe 1 minute, elevator introduction.
I got started in venture just about a year ago. I was at Galaxy, had invested in a couple of deals there. Got them to invest in Eigenlayer and a couple other things. And kind of just was interested in venture because I think it's the way to work with the smartest people and get to learn from them, and was like very curiosity driven and stuff. But before that, I had worked as like a prop trader just because I was working with like a lot of people on Wall Street who didn't really know crypto Twitter. And obviously everything in crypto trading is just very speculative and narrative driven. So like played around with like, trading early in college, just kind of reading about Bitcoin and a bunch of white papers and stuff, and really just knew who was smart and who was not on Twitter. And then you can kind of just follow the narrative that way. So when I joined Galaxy, I basically switched from research to trading really fast after shilling some like trades from Twitter to the CEO there. And then, realized I wanted to do venture because it was much cooler and much deeper, and switched over. And then, I met Constantine, who's the founder of Cyberfund, and a couple other projects in the space, and basically joined and immediately began shilling, someone who contributed to Lido on day one Bitcoin. And that's kind of where my journey has led me today, where very much a Bitcoiner, but working at a VC fund in a space that's kind of historically ignored Bitcoin.
What was it like working at Galaxy? Do you have a Luna tattoo on your arm as well?
No, I don't. I don't want to get into that tattoo discussion. But it was interesting. Like, I think crypto trading is so volatile, and I think trading is very much a personality driven sport where people are successful on it not based off of how intelligent they are, but really based off of what the personality is. So if you're an options trader or a quant or something else, you're probably very different than a directional trader. And I think you see that play out. And then it was really interesting working with guys who were used to 50 basis points moves on like FX currencies, have to switch over to an asset class where like Luna went like to 130. I remember it went back down to 50, and then it went back up to like 140, and then it exploded. And I was like camping that weekend, and my phone was just blowing up like, oh my gosh, the world's exploding. But yeah, I mean, that was interesting. I think the intersection of like really, really TradFi type people who think in very like regulated terms, interacting with basically the financial Wild West and completely human incentives on chain, where anyone can kind of do anything because it's like synonymous, or at least if you do get caught, it takes a while for that to play out. So it was really interesting. I mean, I have some stories and stuff that we can get into if you want, but I think my biggest takeaway is people kind of just pick their jobs based off of personalities, and TradFi is obviously very, very different than crypto.
Yeah. Okay. So you moved into research, and now you're a full-fledged VC. What are you guys investing in? What are your big investments as of late? Like, what are your like hallmark investments?
I think we've kind of taken like a pre-seed, seed stage kind of approach because the two guys who founded Cyberfund have founded a couple companies and successfully exited or are still involved at them, and including P2P Validator and Lido. So that kind of, I guess, like involvement helps the pre-seed and seed stage investing a lot because you can come in pretty early and help people on like kind of fundamental decisions that change the trajectory of the company. And at least that's the goal. But I guess, yeah, we've kind of taken an Ethereum centric approach. I've pushed a lot of the Bitcoin stuff. We've made some investments around staking and kind of some of the AVS stuff, which hasn't been too crazy. But I don't know. To be honest, it's all over the place. Like we've done a couple deals on like AI as well. I haven't led those because I don't really know anything about it. But we can get into specifics if you want. I'm not really sure.
I don't know. Give us an overview of what you think is going on in the staking and restaking landscape right now. Yeah, you can just run with it. I don't mean to like leave it too broad, but I'll ask follow-up questions.
Yeah, I think the AVS teams that I've gotten to work with, they're kind of just wanting like a bootstrapping mechanism for their own network, and then I think there's probably an incentive to kind of leave that network and go to your own thing because it just makes a lot more like personal sense for the founder. I don't think it's like long-term sustainable to like build your own network almost ever. But I think there's just like a personal incentive to do that. And that's, I think you see that play out a lot in the Cosmos chain. I think the only things that really make sense on the AVS side is stuff that's like in the kind of the value or transaction chain of Ethereum. So if you're like getting, liquidity and security from the Ethereum validator set or a subset of it, then you also need to like meet that on the demand side. The marketplace can't be like, the demand side is way different than the supply side in terms of its incentives and where it's getting the value from. So I think, we've kind of taken the approach that like there's very few things that in like the steady state, like long-term outlook, whatever you want to call it in venture terms, that makes sense. And the ones that do make sense are like, pre-confirmations, we've made an investment there, and security and compliance, like preconditions for transactions, basically saying like, okay, should this application accept this transaction, but not doing it in like a censored manner where it's like a centralized entity doing it. But yeah, I think, there's a bunch of things to say here in terms of how it plays out. Ultimately, like I think when you look at DeFi or DAOs, it's just kind of all vaults that offer like different logic attached. And then it becomes just like an AUM game. And it's like a DAO kind of like warfare game where teams are using positioning and using promises to kind of get liquidity. And then once they have liquidity, they can kind of offer products around the specific like vault that has attracted some amount of TVL. So that could be like, a bridge, that could be like a restaking primitive. And yeah, I think these things tend to be like either very, very managed or they lean the other direction and go for like fully permissionless kind of infrastructure. So like in lending, this looks like, like you could have completely permissionless lending pools that all kind of are market driven and there's like vault managers, or you could flip on the other side and look at something where it's just like a big pool like Aave, where just everyone's kind of lending and borrowing against each other. So that's kind of how it's breaking down right now, but and get more specific.
Yeah, wait, I want to quickly ask you because this is something that I talked to like Alex B, he's like quite a Bitcoin maxi, right? But like he brought up this point, and I mean, there's obviously been criticism around like I would say the pool model within lending protocols. Like, do you tend to think that we're going to be moving away from that, like long run? Like just functionally, do you think that like the Aave pool model works very well, or is it just like too much unknown risk when you kind of like have all of these, long tail assets like in the same sort of risk buckets with like the majors? I mean, is this something like, because I know that Morpho, for example, and like there's some others, is it Euler like this? I think, I can't recall, but it's like much more managed, right? Like you're not taking on this like massive counterparty risk when like the curve guy just yeets, a ton of like, but seriously, right? So like, I'm curious if you think like something that I'm not like so in the weeds on, do you think that we're probably moving away from that model as a general statement?
I think it's like, it's all like a rate game. So it's like, it's the same thing in like a lending desk in like a bank. Like, can you like match up different borrowers and sellers to kind of just artificially get like not artificially, but like kind of match people to get like cheaper rates and then be able to charge more than your competitors or earn more than your competitors just because you charge it differently. And I think there's like different ways to achieve that. I think like the big pool approach, is kind of losing kind of steam. I think there's like a long tail of assets. People want to be able to like take a bunch of WIF that they own and like borrow USDC against that. But like USDC people don't want to like have those be their borrowers. So then if you create like some sort of pool functionality around that, and I think we've seen like some teams on Ethereum do that. I think that's starting to happen on Solana. And then, if you get like a chain like Solana where it's very cheap and the transactions are really, really low, then other lending primitives start to make sense. Like P2P lending starts to make sense in that environment because it's a lot easier to match people faster. And then I think those things get composable, just like all things in DeFi, like that they start to integrate. And then you're like, okay, the holistic product is just this big kind of pool of capital. But under the hood, it's like all these things are just like kind of very specific and integrated with each other. So I think it's just kind of like the natural technology cycle. But what is your Alex B point? Because I'd be very curious to kind of hear what he was saying.
No, I mean, it was just like that when you pool a bunch of long tail assets amongst Bitcoin and ETH or whatever, and then basically your point, like that lenders don't want to like give massive LTVs against WIF, right? Like USDC lenders don't want to just have like some type of situations where the market nukes and the collateral is worth zero. And so like I don't know if like the pool model is sort of being phased out in your opinion versus like closer to a peer-to-peer model, although I guess those are like pools as well, but like closer to a peer-to-peer model, whereas at least exactly like more or less the I say like the risk profile. I mean, I don't know that anybody knows the risk profile of something like WIF, but like you have a better idea of what rates like the market should command against something like WIF, right? So I was just like, if you had any thoughts, I'm like less in the weeds on DeFi now, right? So like I don't know, and I tend to think that like peer-to-peer makes more logical sense, right? Like, and also I think about this from Bitcoin. It's not really possible on Bitcoin right now to do this like pool model, but it is possible to do like termed loans, which is interesting to me. But it's like it's certainly not the same. So I don't know if that was the essence of the question.
No, I think it's a really good question. So like I think my biggest like learning in crypto is all these things are super personality driven. So it could be like the Mark Zeller, versus Tarun, battle to the death, or it could be like something kind of more like ideological where like you could be like a founder and you're like, I love merge mining. This is the only way to scale Bitcoin. Or maybe you're just like a lightning guy, right? And I think, you can like look at these on like a very like fundamental basis and be like, oh, is this technology primitive better as pooled versus this other one better? But I ultimately think it's like, who's the guy behind it that's operating it? The idea of making it like, I hate the term, but more like modular and just have like a bunch of different pools that different people can operate. I think that's like free banking. That's like free lending. And the reason that makes sense is you basically want to move away from this like world of DeFi where it's very like, the first people who contributed to the DAO basically manage it. And if they think something should run a certain way, they're making that decision. Instead, like have like open infrastructure, open licenses, and just kind of let the market kind of tell you what people demand. So if that's like a pooled approach or if that's something else, like that's fine. But kind of removing the trust assumption that, all these things have been very, very historically, very, very like personality driven within DAOs where like, if this guy at Aave thinks a pooled approach is best, the guy at Euler or Euler or whatever your religion is, I don't know how you pronounce that.
I don't know how to say it either. I've seen it one time. So, okay. Well, on that note, like as a VC, I assume you work with a lot of these DAOs. Like, what is this like? I mean, when you're dealing with like all these personalities, or maybe even not just the personalities, but just like DAOs in general, like, do you think these things are functional?
Yeah, no, I mean, we have like an investment here that, I don't want to like come on your podcast and chill. So I'm not going to like talk about it too much, but I think like, like DAOs as an idea are really cool. And I think they will be integrated into the real world and like be able to take advantage of like more traditional financial structures. You're seeing this in like tokenization where like, okay, we have things that are tokenized through the Caymans, through Switzerland, through Bermuda. And like, which one's the best approach? I don't really know. You ask a lawyer, they all have a different opinion. But, people are getting smarter about how to get accountability within DAOs, where the contributor, has this amount of resources. And if they're not acting in a certain way, like the resources are withdrawn. Or if you were like operating a multi-sig and you had liability over it because you were operating a multi-sig, instead you could wrap that in an LLC. So I think like I think DAOs work. I think they're just like, they're like this new kind of business. They're this new layer of like business physics that was like really shitty. So early on, the only ones that worked were the ones that were basically cults, where like everyone who contributed to it was a huge believer in it long term. So they stuck around, even though they're extremely chaotic, extremely personality driven, have unclear incentive structures, don't have good controls for like conflicts of interest. That will slowly like change, I think. But yeah, I think there's like not that many that make sense right now. I think over time we'll see more that kind of emerge and make sense. But you really have to be like, okay, what does this DAO want from a blockchain? Because like then it's just like some form of like censorship resistance, which has like the trade-off of like, you have to work on something that's super slow and expensive. So yeah, I think with all these things, again, like super personality driven, which I know is like not like a super interesting answer, but it's kind of, my interaction. And I think you can see it like if you look at like CoinDesk or like Rect News and just like read back, it's like, wow, these are all so crazily different. And it's because they've got, the people behind the scenes, they're not so autonomous yet.
Yeah, but like, I guess if your theory is that we like become increasingly professionalized with this, okay, but like it doesn't seem like so alluring, the notion that like the permissionless decentralized like future of finance is one in which like personality driven like investing is the crux of it, right? Like it seems like to me like this is like, oh dear, like we have some guy in charge who's got like some like extremely like cult like following, and people are like, yeah, that makes sense. I mean, and you're right, like almost all of, I mean, especially like, I can name names. I don't know if you can, but like with Maker, certainly, right? Like Rune like disappeared for like a year and a half and then came back.
I don't think that's like exceptionally odd though. Like look at like AI founders, like an AI board literally like cannibalized their front guy. And then a week later, like he was back and better than ever. And it's like, did they plan this so that like they would get more attention and then more funding? Like, who the fuck knows? Like, I think it's like,
well, all right. I would say one thing is that like dysfunctionality there doesn't justify dysfunctionality here. Also, maybe like I'm not all into the like, I just sort of extricate myself from the like AI like nerd snipe, but for the most part, I would say that maybe like a company like OpenAI that's raised like $1 trillion is slightly different than like Maker's in game. I mean, this is something I'm willing to put out there, right? Like I don't know, but yeah. So I don't know. I definitely agree. Like you see these like strong personalities in DAOs, and you're like, yo, like is this really what we're aiming for long run? Like, but then the counterpoint to this though is that like when you become increasingly professionalized, it's just like, all right, is this like centralizing unto itself? Like it's pretty clear that whoever's designing these like mechanisms, right, should probably not be some like basement dweller who was early to like Aave, right? Like they just
I don't think any DeFi founder, for what it's worth, is a basement dweller. I think they're like,
but DAO contributors sometimes have like I mean, dude, it doesn't take like, all you have to do is go and read some of these forums. All you have to do is go and read some of these forums and see what people propose. And you're like, you cannot possibly be serious. Like this has to be a troll, but these people are serious.
I mean, I think, if you're asking me my opinion on Endgame, that's a pretty intimate question for a podcast. But like, I thought we were going to just be on here like riffing about goosenals and ordinals. But I think to kind of, shout out to the goosenals. But I think to kind of like answer your question more generally, like in venture, it's just like, when you meet a founder, you're like, okay, can this guy do something that's never been done before? Can they like step out and found something that's like in kind of a gray area? Uber like is the very famous example where it was like illegal, right? And like it kind of sucked for a lot of taxi drivers that historically, their only income was this medallion that's being passed down through their family line. And then all of a sudden, boom, like Uber's in town and just kind of wrecking your business. So like innovation is scary, and it tends to self-select for people who are like a little bit, maybe they're on the spectrum, maybe they're just like socially ostracized, maybe they're like just very hacky people. So like a great question is just like what have you done that's like semi-odd before? So I in terms of the contributors and like who's actually working on these things behind the scenes, it's a very like narrow segment, just because like coding in Solidity is just like notoriously difficult, and like even if you get it right, like you could still have a hack and just like lose a ton of people's money. So like I think that's a small segment. Where does this like kind of end up is I think DAOs will be able to leverage stuff in the real world more autonomously and also with like more structure and controls and efficiency and accountability. I think that makes DAOs just a lot nicer. But I still think, yeah, like there's a lot of limits to like what you would want immutable code or like immutable business logic for. And because the surface area of attack is so broad, because it's an open network where anyone can attack you, like the focus of each DAO will always be very narrow. And I think that's always, that will always be the case.
Yeah, that's fair. I heard you mention tokenization earlier. Are you pretty bullish on like, and I also saw you tweet about it as well. So this isn't out of nowhere, but what are your thoughts like generally on, I suppose it's like tokenization of equities? Is this something that you guys invested in recently? What's the thesis here?
Yeah. So I think like it didn't really click for me. But, I live in Williamsburg in Brooklyn and I'm from Colorado. Shout out to the Nuggets. Almost made it. But I think like the thing that really clicked for me was just looking at like it's called like Neobank. It's like this very famous bank in Brazil that basically came in and just was much better at managing risk and much more focused on like client and customer needs and started issuing credit cards for the first time in Brazil and basically transformed a lot of Brazil's economy because you actually had like good banking. And then if you think about like, okay, how expensive was that? Like you had to play like some like kind of BS political game with the local politicians. You had to get all these licenses. You had to go through all this regulatory hurdles. Then you had to like actually hire the people. Then you had to like make sure you had security. You had to like background check all these people. That's notoriously difficult. I think tokenization is really just like amplifying good jurisdictional controls and good shareholder structures. Shareholder law is evolving and it's never been perfect. But like in the US, it's pretty good, right? Like shareholders tend to have like, Apple stockholders tend to have like pretty good alignment with Tim Apple. That's a joke. But I think like that's really what it's about, is just amplifying like really great things about certain jurisdictions. And like then people can access equities and banking and bonds and the risk-free rate of whatever currency you're talking about abroad really, really easily without having to replicate all that infrastructure that like Neobank had to build in Brazil. And then when they go to Mexico, they have to completely restart because it's a different regulatory regime. So like blockchains are just like a really cool way of doing that. So that's kind of where like my thinking came from. I think with like liquidity, it's just like you kind of, certain parties are not able to participate until they get the certain amount, like a certain threshold of liquidity. Like if you're on a trading desk, like your minimum buy size $1 million, you're not going to be like yeeting $100 into like Dogwood hat on the day it launches because it's too small a threshold of money for you. So I think like tokenization and stablecoins and all these things, like they have to get to like a certain threshold of dollar value before they become interesting for some of the bigger players and then really take off locally.
What do you think is the big like unlock there? Like I guess you sort of explain this with like the neobank thing, right? Like building out all this infrastructure and whatnot, but like what is the big, like in your mind, what is the big unlock of like putting equities on chain? Because like, well, maybe I'll give some context. Like most of what I've seen thus far is like it still requires, right, like it to be backed by, well, I mean, which you would want, I would assume you'd want it to be actually backed by like shares and held in the Cayman Islands or something, right? So like, and then the people buying them, right? Like, are they going to have to be KYC'd still, right? Like, or no?
So,
or maybe this, like, maybe a better question, like, what do you see as the future of this? Like, where are we headed?
Yeah. I mean, let me answer the first one super quick. So, the Swiss Distributed Ledger Technology Act, their words, not mine, DLT, basically lets you custody assets where people who hold the token that is then issued based off of that underlying asset have rights to that asset, even if there's an issue with the smart contract, even if there's like a bug on chain. So they actually have rights over the asset, which is like the real world law and DAO integration that we were talking about before that I think is very exciting. The reality is like 2/3 of the world is like underbanked or unbanked. So it's like, I think they have, like equities have huge product market fit. I think like the hardcore like cypherpunk view of the world, which I think some people are fans of this. I don't really think it's true, is that some people think like the only thing you would hold your savings and like reserve balance of money in is the S&P 500, and you would just spend the S&P 500 or NVIDIA and just like that would be on your credit card, and it would just like at payment that would convert into whatever local currency like the merchant accepted, and that's like the end game of tokenization. I don't really buy that for a couple reasons, but I think like what they will do and what they will unlock is basically when a regime can start to like let people living in another regime exit that regime and like have the escape hatch to like, okay, I grew up in like Venezuela and now like communism is rampant. Well, instead of having to like leave, I'm just going to put all my savings on chain. It's going to be in like this 12-word phrase that I have saved that nobody knows about. And now I own like the S&P and I never have to leave. So even if like I lose my property, even if like I'm like, I'm just like, my entire family is like forced out of the country, it doesn't really matter. Like I have exited that regime without even leaving it, without having to go apply for a bank account, without having like identification documents when I switch countries. So I think it's just like, that's like a superpower. And then that forces like Venezuela to not be as shitty. You see this in Berlin or like, North Korea, like when people are shitty or when regimes are like crappy, like people just leave the regime. Now you can do this financially with tokenization. That's the end game. And then it forces the regime to adapt. So, the Berlin Wall fell. I would assume like communism in China and like North Korea, eventually that'll fall. Like I do think that. So that's like the end state for me. Now tokenization is just a part of that. There's obviously like way more complex parts of it.
Okay, well, I accept. I don't necessarily accept, but I'll accept it as an answer.
Thanks for listening to The Gwart Show on the Blockspace Podcast Network. Subscribe to our newsletter at blockspace.media to get the show directly to your inbox. Show links, transcripts, and Bitcoin articles twice per week. Stay ahead of the conversation by visiting blockspace.media.
All right, let's talk about like your trajectory in VC. Like I think that you've become increasingly interested in Bitcoin. You have mentioned that you have like some schooling in Austrian economics. Like what I feel like as of late you've been increasingly interested in Bitcoin. I also know this because like we chat, like we talk, so like it's not like there is context to this, but like definitely seen you more and more interested in Bitcoin as of late. Like what do you think spurred that?
Yeah, I think like as an armchair, like non-technical person, Bitcoin's like really, really difficult. So I think early in my career, it was like just like a little bit, or like early into the space, it was a little bit difficult to like grok or like understand the really important parts of Bitcoin. So like in like 2020 or like 2019, when I was like really diving into like some of the technical parts of Bitcoin, understanding like lightning channels was like pretty hard. So I think I think that wasn't there. I also felt like, when I was early in my career, a lot of the like OG Bitcoiners are just like thought influencers and they're very aggressive about like they're smarter than you. And so I think I felt like in Ethereum or Solana or whatever ecosystem, it was just a little bit like easier of a path to scale up mentally because the concepts, when you talk about like Bitcoin opcodes, you're talking about the literal like opcodes. When you talk about like EVM upgrades, you're like, oh, proof of stake versus proof of work. Obviously, you can get in like, the nitty gritty of it, but like the concepts are a little bit more abstracted. So for like someone who didn't study engineering, it's easier to start with and then like work back down to. So I think that was kind of natural for me. And then I think the other part that was kind of natural was just like, because it was earlier at Ethereum or earlier in, MEV or whatever category you want to talk about, it was just easier for me to scale up quicker and I could have access to like smarter people to learn from sooner. And I didn't have to go through like this like kind of Puritan, tyrannical like thought leadership regime that kind of exists in Bitcoin. That's broken down a little bit over time because I think like some of these, a lot of the lightning thought heads look pretty stupid at 2024. I don't know what the follower of a lightning thought head is thinking, but maybe they still look great in their eyes. But yeah, I think for me, I always thought, Bitcoin would be better. Like I remember when like John Light wrote about like validity rollups on Bitcoin. I read it like the day it came out and I was like, this is like this is what I wanted. This is what Starkware wanted to do. Obviously, this is what like Arbitrum was talking about in 2013 at Princeton with like Arbiter. I think it was like Steve's the original name was like Arbiter. It was a Bitcoin like L2 design and they couldn't get it to work on Bitcoin. So like they went to Ethereum. But like for me, it was always like, this is the most censorship resistant thing we have. This is the best chain we have. This is the one that's actually codified its monetary values. And is it changing them on the whims of like a hierarchy of like techno central bankers? So for me, it was like kind of natural to come back to it. I think it was just like, you're sometimes you're just not in positions where you gotta explore the things you want to explore. So yeah, I can get into the Austrian econ stuff or you have a specific question. I don't really care.
No, I think that was a good that was a good intro. You said that I guess you were referring to Ethereum with like the minimal viable issuance. Like, is this something that you object to? Like, what is the what made you say that?
Yeah. So, this is like something I was talking to a friend about, which is like, if you're like thinking in like very like VC abstract terms, you're like, what is the best DeFi market? Is it lending? Is it staking? Is it trading like Uniswap? And I think on Bitcoin, you're like, okay, like, staking is going to be like small. Maybe it'll exist. Maybe we'll get like some sort of slashing logic that like does something interesting for the Bitcoin network. But like right now, it's like pretty small TAM because it's proof of work. It's never going to switch. That's great. So maybe it's lending. It's like kind of not that interesting to be like a stablecoin long term, because if you're like, okay, we're a stablecoin that's amplifying the US dollar around the world, that already exists elsewhere with like Circle or any of the DeFi protocols doing it. But it's also just like the idea of Bitcoin is kind of to get rid of, arbitrary issuance, which, Ethereum has, as does the US dollar. So I think in Bitcoin, you could say like, okay, actual lending, like, and that'll be like the risk-free rate overnight is like, what are people actually borrowing on their Bitcoin overnight? And like that long-term is interesting. And then it's like Uniswap. So that's like interesting and kind of full of execution. In terms of the MBI stuff, I think it's just like, okay, this is something that's super related to staking, super, it looks kind of orthogonal to restaking, but it's like, actually it's really not, because if like MBI kind of changes, you have like a smaller kind of staking set, and then more of the like order flow starts to pass through restaking primitives, then you're basically like enshrining this yield. This guy Data Always, who's like this really good data guy, like wrote about this basically, that like if you lower issuance, you basically enshrine alternative forms of issuance. And then it's like, okay, what are the sustainable alternative forms of issuance? Well, it's probably like MEV, like order flow. So basically you enshrine restaking on top of like Gasper. That's kind of where I think it goes. I think Bitcoin actually gets here someday. I think, like Marathon's using Slipstream right now to like make a bunch of money. The other miners are kind of asleep at the wheel, which is okay. Fred at Marathon is doing a great job, but and no conflict of interest here. I want to be clear. I've just met him one time and he's a cool guy. But I think with Marathon, like it's all off chain, it's all trusted, and then that's going to lead them to get more hash rate over time, which is not great. I think ideally you build this on chain, but to build it on chain, you need some sort of like slashing gadget, some sort of accountability gadget between all the miners to say like, oh, we'll accept your transaction on chain. And this is like a very meta point of like Gasper is this idea of taking something from proof of work, dynamic availability, where the chain can just stay live, and applying safety with a lag. You could do something on Bitcoin like this theoretically if all the miners registered and put like their, put like UTXOs inside of a smart contract and said, we'll slash you if we don't include your transaction. And basically you could build like Slipstream or like pre-confirmations. This is super future oriented, and like Bitcoin script is so far away from this. But this is something, we've talked about internally, our experience with Lido and then, kind of my connections to some of the good Bitcoin developers just talking about, the limits of script. It's very clear. It's very far away that this could happen. But theoretically, you could do this. And this would be like a better version of Gasper, because the accountability gadget would be even further removed from the dynamic availability. And obviously, like Bitcoin's proof of work availability is awesome. Like we had a huge partition in the network when China banned mining, right? Or when like there was that inflation bug like in like 2013 or whatever. Bitcoin didn't break. They just went back to a block like 300 blocks ago and started to build there because they realized there was this inflation bug. And then they built from that block. And it wasn't like a break in the network. It was just, so like these things being abstracted away from each other even further, I think is a superpower, which makes me like even more excited about Bitcoin. But yeah, I think it's like super, super relevant. Back to your original point. I'm sorry I've been talking for a minute, but the MBI is like super relevant for DeFi, right? Because it changes what lending primitives, like what collateral is the most. It changes like how important restaking yield is, the entire Ethereum validator set, how much leverage, that like permissioned restaking operator has over the Ethereum ecosystem. And this is just another argument for like why Bitcoin is great, right?
Yeah, I want to ask, like you've worked a good bit with Lido, like from the, I guess, BC, but maybe this applies to just like those participants in Lido DAO and just like the project as a whole. Like, how do you say? Sorry,
the basement dwellers.
No, I'm not saying that. I'm not accusing Hasu of being a basement dweller. I'm just saying there are people in the forums, right, who say some. I mean, I've read them. Once you start reading those, you can't stop. It's pretty absurd what people contribute to, like,
it's like a traffic
billion-dollar projects. Okay, but what I wanted to ask is, like, when you look at like coming from the angle of Lido, how do you guys look at like changing of MVI, for example, right? Like that certainly has to weigh on like an entire business model. And this is something that like John Charbonneau has talked about and like other people have talked about, right? It's like, look, there's all these businesses that are built around some understanding of like how Ethereum issues rewards. And if you change that, like this can change the dynamics of businesses and projects are built to top. And like, so what degree of like influence do you think projects should have on that? And like, where do you fall maybe with, I guess, regards to Lido, or if you want to chill another one of your porcos?
No, that might not my game. But no, I like the question. I think it's like super interesting from a bunch of angles. But first off, I want to like, I don't work at Lido. Cyberfund is a separate entity. We're a VC. We make investments and help our porcos and incubate. We also do grants. We did a grant for the MBI kind of discussion, basically trying to fund a bunch of research that was not affiliated with the EF directly, not affiliated with Lido directly, or Coinbase or whoever would be interested in kind of the staking market, and basically say, what are like the actual implications for solo stakers? I think like you've had Mike Meter on, and he talks about like two-tier staking, that basically when you delegate stake to someone, it's really like the operator that you need to care about the operator's incentives, not really the user who's delegating, because the user has no idea. Like the operator could get you slashed, and it's like, it's not their money. So there's like a huge principal agent problem there, which is something, we've thought about a lot as well with restaking. But I think like for MVI, I want to say first off, I think there's like the charitable explanation, which, I'll give super quickly, and then like the uncharitable one, which I think is like what really is relevant for Ethereum actually, because Ethereum needs to attract people. It has competitors. It has Solana. It has Bitcoin hot on its heels, right? So, or I mean, Bitcoin's way ahead of it, but like it has other ones that are hot on its heels. But so I think like the charitable thing to say first off is like, I think a lot of the EF people have done a great job, and they really are very, very thoughtful. Some of them are a little bit sandbox. If you're an expert at, Peter's an expert at Gath, and I'm not calling him out in particular, but he's like obviously like a genius. But to be a genius, you have to be really spiky in one area. You might ignore the application level layer, or you might ignore like DeFi and not think about like solo staking or centralized staking and stuff like that. But I think if you look at it from like just the pure operator play, like guys who have run validators, guys who have built DeFi primitives, it's abundantly clear that this is like a very centralizing thing. And like, why is Bitcoin great? Why is Ethereum great? Because it's censorship resistant. What does that require? Decentralization. So you actually will lose a little bit of like monetary premium, I think. I don't think this will be like observable quantitatively, but I think qualitatively, assets that are more centralized, Tendermint can have 120 nodes, Gasper can have hundreds of thousands. They tend to just be perceived as more censorship resistant, and then people ascribe a higher monetary premium to them because they're like money that you can't really mess with. I think if you do the opposite on Ethereum and say, okay, we're going to have more of this controlled by Coinbase, more of this controlled by centralized entities, because DeFi things are just more expensive because they're more inefficient to run, then you do kind of end up in a world where it's more centralized and it probably hurts the currency. But I think the biggest thing in the uncharitable explanation is just like, when this thing is so like fundamental to Ethereum and so fundamental to DeFi primitives, and there's like potential conflicts of interest here, I think you just kind of end up in this world where you're just like I don't want a developer who's like has a huge say in like issuance to also be involved in DeFi protocols that, their entire strategy orients around if they have MBI or not, right? So I think that's abundantly clear that's like, even if it's okay, I think the uncharitable explanation, which Ethereum needs to start paying attention to, is Bitcoiners are going to look at this. A lot of people are going to look at this and be like, what the hell? And that's why they're not going to adopt your chain. Not because you don't have account abstraction, not because you don't have this EIP, whatever. It's because they're going to start to perceive this thing as really not decentralized. And I think that's the real risk, the optics risk. And the optics is, perception is reality for a lot of users who are not in these discussions, and where the uncharitable explanation can get around the world before the charitable one has even tied its shoes. And this is, for me, this is why I'm like, guys, like we should really be paying attention to Bitcoin. And it's won over a lot of my team. I think early on, like I was the loudest proponent, and now they're like, okay, yeah, like maybe we should think more about Bitcoin super, super seriously long term.
Okay, we can talk more about Bitcoin in a second, but I want to ask, like, how do you feel about, I mean, you don't have to throw anybody under the bus, but how do you feel about like the recent Eigenlayer and Ethereum Foundation, investment, and then also like just in general, it seems to be like there's like some screeching amongst VCs. Like I said, you don't have to point any fingers, but like it definitely seems like
gnashing of teeth.
Yeah, like staking and restaking. Like it seems like, I guess my read is that like some of the bigger VCs must think this is just like absolutely a crusher business. And so like they're just like extremely keen to get their hands on staking and restaking. Like, I mean, the protocols I'm talking about, but like, how do you feel about this like sort of, I don't know, influence or like this discussion? I mean, like a lot of it sort of came about, became public recently. And I guess some people knew about this, some people didn't, but like, what are your thoughts? Maybe Eigenlayer, and then just like the fighting over staking protocols in general, and then we can go talk about Bitcoin, which is much more interesting.
I think it's like it's fine. Like like if you need technical help on some sort of risk management, and you think someone's uniquely equipped to do that, and the only way to get them involved because they're like this independent operator is to incentivize them. Like if you find like a market clearing price, like I'm a libertarian, I'm not going to say people can't do what they want. Financially or otherwise, or an application. And first off, like I want to disclose, I invested in Eigen. I angeled into it, and then I also got Galaxy to invest in it. And have some other conflicts there, obviously at Cyberfund. So tried being as neutral as possible. I also have skin in the game with all these things, so it's fine. But I guess my perspective is like people can kind of do what they want, and then kind of the optics fall where they may. I do just think it's like, the clearest thing is like, if you're even talking about tinkering with issuance when we have so many other issues going on, and you're already like alienated from a large segment of the community that's in Bitcoin, like, and you know what, like the only way to scale a block, like Solana is getting rollups. Like this is like the point that I think gets lost in the NVI thing is like Solana was this whole like, oh, we don't need, we can have a global state machine, but now they're like, actually we need rollups to make Solana scale. So if everyone needs rollups, all that matters is what asset are you getting from that decentralized network? Like what thing can you have an exit hatch out of where your money is still sovereign, or the tokens you brought in through that smart contract bridge are still sovereign? And it's like, okay, if that's what matters, then like perception of that asset matters a lot, because the utility on the rollup will be, broadly commoditized. Like a lot of this stuff is open source. You can just copy and paste OP stack. There's literally companies that'll do it for you. So in that sort of world, like what really matters is what you're getting from the bridge. And I think if you're like, oh, let's just like arbitrarily mess with the asset when like half your community is against this, and you have other issues going on that are more pressing technically and engineering wise, which like I don't even know about because I'm not involved in that and not that smart. But I think it's just like very foolish. Can you do it? Yeah. Would I ever say no? There should be like some legal thing around this. No. Will other people at your company maybe be frustrated with that? I think if like someone I worked with who was like pretty analogous to me got like a paycheck, I'd be bummed out. I didn't get one. Jealousy is very human emotion. So not going to call out names or anything. I just think like, the Bitcoiner in me says let people do what they want, but also people are going to judge you how they want, and they might exit your system because they're frustrated.
Do you think that there's more like little petty catfights amongst crypto VCs than TradFi VCs? Like, I'm not so well acquainted. I mean, I don't know if you are, but like, I'm not so well acquainted with like non-crypto Silicon Valley VCs, but it definitely seems that even the most like highly regarded VCs in crypto are like throwing shots at each other, not infrequently And like it just like it seems to permeate the entire thing. Like, I mean, I'm like all of these VCs, like I know that some of these guys like refuse to be in a room together. And it's like, I don't know if this is common or not. Like, it's just like such extreme like pettiness amongst like the guys who are allocating like hundreds of millions of dollars. I'm like, what is going on? Like,
no, I love this question. I think, one of the reasons I joined Cyber was getting to work with operators who just like were drama free and we're just like, let's build stuff. Like, who cares? Like, technology is more important. Building stuff is more important. The drama is undoubtedly funny. And since you asked me to weigh in on it, I will. In terms of trad VC versus crypto VC, I think it's like trad VC has just been around longer. And because it's been around longer, there's more tit for tat economics. The exit is, takes longer. The cycles take longer. So you can't be like as knifey publicly, but that just means people will knife you more privately. And just like social media, right? Like, people are harsher online than they are in person. When people knife people behind closed doors, it's oftentimes much harsher than what they will do publicly. Like, okay, I won't be in the room as this guy. Like, okay, I don't care. But like, if you like do something politically behind closed doors, it's probably much worse. I can't really think of any examples. I'm only a year and a half into this, so haven't had like too much experience there. I will say, it's kind of like the journalist quip of like, we're like academics, right? Like, there's not that much grant money going around your like business department, so then the elbows are really sharp, right? Well, with VCs, there's not that many ideas. There's not very many good people executing those ideas. There's a lot of money. So what do you do because you're bored? You just like stir up strife. And a lot of this ends up being positioning. And I think, the way I look at this is like the VCs who are like less drama are actually the ones you want to take money from. And I think those are the ones like when we invest in companies and bring other people in, it's like, who's the low drama guy who's just going to do his job and like not get an ego? Because like being a founder is much harder, even if it fails. Like, that's much more impressive than being like, you're trying to do something that no one has ever done in an interesting way. Then like, okay, I just have like the privilege of working with this very guy, smart guy. Now I have like proprietary information because I got to work with them, and my job is to keep my mouth shut and to like be there emotionally and support them through, the good and the bad. And like the good ones really don't need you. Like, you're a good kid, goes off to college, does great. You're a bad kid, like you have to work with every day. And that's how you can judge people. It's like, how do they work with their bad kids? So in terms of like the screeching and the gnashing of teeth, I think it's just like, again, like crypto venture is so new. There's a lot of people who like don't have like fundamental views on the space, like the Austrian econ thing. Like, how many people when they invested in L1 are like, will this be economically sustainable? And it's like, okay, maybe there's a pathway to be economically stable. Like, Ethereum added, proof of stake to get rid of its proof of work issuance because it wasn't going to be able to subsidize it like Bitcoin can. But like some consensus networks might be too expensive if you look at like the nth validator in terms of the issuance you have to pay off. So you won't be able to replicate like Ethereum's design. Or like if you look at a proof of work chain, right? It's like, are you going to be able to have the same sort of utility that Ethereum has? Or are you going to be able to have, which wasn't even enough, or are you going to be able to have enough like moneyness or like store value narrative to compete with Bitcoin? You're not. So like, I think when you look at it from like that level, like there's not that much experience to go around. So then people just get like kind of like, they throw hot takes on Twitter or just like, make their personality like, oh, I invested in DeepIn. And it's like, okay, like what the hell is this thing? I don't know. That's kind of harsh, but
yeah. What do you think of DeepIn?
I think DeepIn is just like this like meme. I think it's like, like decentralized physical infrastructure networks. Okay, so blockchain. What does this blockchain do? Okay, it progresses blocks with Coinbase issuance. Okay, so it inflates. Okay, how do you get that inflation to not just run away and just like take you away on its skis and just the entire thing implodes? And the first contributors had huge amounts of tokens and it lists because there's no regulation around listing really fast. Like the entire thing is just like, it's so convoluted that the people who I think really believe in it are like well-intentioned because it's just so obviously like not going to work. But yeah, I think that like a DeepIn network is trying to compete with Ethereum or Bitcoin or Solana. Like Solana's going to add rollups. It has an EVM like right now. It doesn't provide the exact same functionality as EVMs. Neither will like SVMs built on top of Ethereum or on top of Bitcoin. But you're all competing for the marginal user in the marginal application, and you're competing for them with like your narrative and your store of value and like how decentralized you are. And that's going to be true for DePIN. Like you've seen every Cosmos app chain eventually becomes like general purpose. So yeah, I mean, not a fan. I know you're like really big into DePIN, so I don't want to be too harsh.
Yeah, I've been a pretty strong advocate for DePIN for a while. I can't name a DePIN company. Actually, that's not true. I could, but just the idea of it is pretty alluring. All right, let's move on to let's finish with Bitcoin stuff. What has excited you most in Bitcoin? You seem to have pivoted off the Ethereum train into Bitcoin. What's exciting you?
Well, I mean, there's like a couple ways to like unpack this, but you just asked like what excites me. I think it's like the flexibility. Like you have some really awesome core developers, some really thoughtful people. I went down to like the Bitcoin Plus Plus conference, or I think it was called like Bitcoin Script as well, down in Austin. And I think I was like one of like 2 VCs there. It was great. And like every like developer was like, it was like the geniuses of Bitcoin. And they're just like very humble. They're very smart. They want to explore these things openly and honestly. And they're very long-term oriented. They're not like, oh, this new L1 is like going to frick up our chain. We better add some I'm not going to say it, but we better add something to deal with it. But and Bitcoin is just like, there's like just a long-term orientedness of like, this thing has like something already really, really powerful. It has like an awesome asset that like no one can tamper with. And we don't need to like mess with that. So I think that mentality is kind of fresh. It's not like what's the latest thing. It's like, okay, what's going really well right now? How do we build this thing for like a century? Which I appreciate. And then I think the roll-up thing, like I've always, I think early on, guys like Eric Walt, I remember I was in college and I would just read like Eric Walt's Twitter because he would just troll people. But it was like, he was very good at unpacking like Lightning versus roll-ups and why roll-ups are better. And I think he was like, he's on the board of Starkware or something like that, or like ZK Sync, and like was one of the first advocates for roll-ups on Bitcoin back in like 2019, 2020, like right when like roll-ups were getting like slightly mainstream on Twitter. I think seeing that play out and seeing these companies get funded and knowing that they're going to compete and bring kind of this expressivity to Bitcoin is great. Because 1, now my Bitcoin does stuff natively. 2, like that creates a higher incentive to use Bitcoin and to adopt Bitcoin. And 3, it helps stabilize the asset. Because if I'm using it in like P2P lending or exchanges or whatever, there's just more marginal buys and sells in the order book. So then like the volatility of the asset goes down, which makes it more attractive in the real world for payments, right? Like the reason people don't accept Bitcoin now for payments broadly is because it's so volatile. Well, if we can reduce the volatility by having like a micro economy on chain that helps stabilize it, like that's very exciting. So I think like the entire thing to me is very exciting. I wouldn't say I pivoted back to it. I think it was just like there weren't, I didn't see great companies in my first couple months doing venture in Bitcoin, or I didn't get the chance to meet them if they were out there. And then before that, I was in trading, and trading, it's like, oh, like what's your like macro view, helping manage this balance sheet of crypto assets. And I'm like, oh, I really like Bitcoin. It's like not that helpful. So yeah, I'd say yeah, but I guess it's a little bit of a pivot.
Are you like primarily interested in rollups? Would you say, or are there other projects like either layer 2s or just projects built atop Bitcoin that are of interest to you? Like, I guess what I'm asking is it like strictly layer 2s that you're mainly focused on in terms of like your investment strategy, or are there other things that you're looking at that may not be like L2s or whatever?
So I think, we've made one investment in an L2, Bitcoin L2, which, I'm obviously really psyched about. And I think it's like, the level of determination there more than anything that the team has really sets it apart. And, they've done a really good job hiring and stuff. So excited about that. So skin in the game, like transparently, like very much believer in rollups over Lightning or anything else. I think like DeFi on Bitcoin itself is kind of dumb. It's like, okay, 10-minute block times once a week, hour block time on average, like kind of a hellish experience. There's like Oracle attacks you can do. The trading slippage would just be like, you'd probably get zeroed on any trade you did. So like DeFi on Bitcoin's a bad idea. I know there's teams doing like discrete log contracts, like trying to do, but those are like pretty inefficient. Script is like kind of awful to work with. I just don't think the user experience will ever get to like a way that you can kind of get adoption. I think what is kind of more interesting and more unexplored is merge mining, which maybe you'll laugh at me, but I think this is like the old idea for an L2, like the original idea for an L2. And it's like, what if we can basically make something that's like backwards compatible? So if it breaks, it doesn't like really affect Bitcoin at all. And miners can kind of support it. And you know what? Like the coolest thing about it is if it has enough hash rate support, it works. If it doesn't work. So it's like a very like free market design where it's like, if there's enough demand for this merge mine chain to be sustainable, it'll work. If there's not enough demand for it, it'll actually break. So it needs like, 51% of the hash rate to support it. I think that's underexplored. I think just miners haven't generally been that supportive of it. I don't think it was like ready, like from a technology, like market perspective. But I think like you look at it like Ethereum, it's trying to replicate this, right? It's like trying to do base sequencing to recapture MEV and the execution fees because it's not going to be able to pay for itself anymore with just data availability. It's being commoditized by the 50 data startups. So I think like Ethereum's trying to do this in the proof of stake world. Bitcoin could have done this, a long time ago. It didn't, and that's okay. But for me, I think that's what's underexplored is like, what is a merge mined, a SVM client that's merge mining Bitcoin? What does that look like? Like that's a crazy idea, but like maybe it works and maybe that's the way we do it. So, I'd say that like long tail of ideas is really what I've been interested in.
That's kind of interesting. I haven't actually seen a lot of like discussion about merge mine chains recently in terms of like the newer entrance of L2s, right? Like I haven't really seen this being, it's kind of interesting you say that. Like what, is there anything that like came to mind when you like, I mean, you don't have to like drop projects or anything. I'm just curious. Like I really haven't heard much about that. And obviously there have been merge mine chains, right? Like in the past. And I mean, mostly those rewards trend to zero versus Bitcoin. So it's never really captured a tremendous, like a lot of adoption, but yeah, maybe this could change, but like what reignited an interest in merge mining? I'm curious.
Yeah, I think like when I was like really going deep on Bitcoin for the first time as an investor, mini script, like looking at all these like kind of wonky things, discrete log contracts, lightning atomic swaps, like just like wonky things. It was like the oldest idea was merge mining. It was just like, can we add like this like subjective, optimistic bridge that miners support or they don't support? And it's like very free market oriented. So I didn't remember how I first heard about it. I've known about it for years. I think my brother kind of like probably like brought it up another time or something. But yeah, I just thought it was like really interesting. And then the more I thought about it, I was like, this is very compatible with miners. And like everyone's worried about like block space demand for Bitcoin once Coinbase issuance goes down. And I think Bitcoin will be fine. I think there'll always be like a sufficient amount of demand for like transactions for ordinals. I think Udi will just launch like 100 collections to make sure Bitcoin stays safe. But I think, who knows how they'll do after that many. But I think like just from like a fundamental kind of principled view as an investor, I wanted to look at like everything, and give a first pass through it. And then just kind of settled that like Ethereum is trying to do this with its rollups. So maybe this is the right way to do it. Maybe adding OP cat so you can have an exit hatch, but then using like a merge mine solution is the right idea because it's compatible with miners, but it gets rid of like the biggest attack vector where miners can just like, if enough miners collude, they can like break the bridge. So I don't really know what like drove it fundamentally. That's a great question. So sorry, I don't have a good answer.
No worries. Like I want to ask about with like some of these L2s, you said you invested in one, but what is your thought process in terms of like, do you think that these new L2s will establish some version of product market fit or attract enough users that it pushes the community to merge something like OPCat or like some of these like great script restoration thing? Like, do you think that, I'm just curious if you think like some of these new L2s will be the like forcing function, if you will, like, oh yes, like it's very clear that this is found, like a group of users that wants to use this, like, I've talked to other people and they contend that like a lot of the Asian community who holds a lot of Bitcoin, like they want to yeet it into like these Merlin type things, right? And this can be like sort of the, what proves that there is demand for this type of thing. Is this like the rationale that you look at a lot of these L2s with right now? Like, and obviously the context for this is that like all of these are multi-sigs or,
From the Bitcoin side, like Bitcoin holder side, I think it's like, you could probably say like, there's like 21 million UTXOs. Like some of these are like lost and then you could be like 70% of these are like in cold storage, and then you're like, okay, your market size is like, 20 to 25% of Bitcoin holders, and like you said, maybe they're in Asia, maybe elsewhere. I think there's just like I think it's like DAO warfare. Like we're in like late stage Ethereum scaling DAO warfare, where like, like Arbitrum kind of mogged optimism with like it's some vulnerability that they found, then disclosed, and then tweeted about, which was like kind of baller. But and I have no conflicts there, so I'm not trying to make fun of anyone. But I think in Bitcoin, like we're in the early innings of kind of this warfare where you're basically competing for TVL. There is some like feature differentiation in terms of like what applications can you get on top of, like if you had like several EVM rollups, like which DeFi applications can you get on top, because some of them are better than others. And then there's like a network effect, right? If you have more liquidity and more users. So I think that's how it kind of plays out on the L2 side. And then it's like, how do you scale your rollup to like higher TBS, better throughput, lower fees, and like diminish, or kind of like pay less data fees by like compressing the data size that you have to post. And that's kind of what's happening in Ethereum now. Like Arbitrum added stylus. There's like some people trying to do like parallelization through the SVM. Some people trying to like backdoor parallelization onto the EVM. People working with Reth a lot, in and outside of venture funds. So like, I think there's a lot to say there for Ethereum. I think in Bitcoin, it's just like we're in the early innings of this. The same thing's going to happen. The really interesting discussion is like, Starkware adds a bridge to Bitcoin while also having one on Ethereum. How does that work? Is that a better design? Is that politically optimal to like placate to two groups of users on two different chains with two different versions of assets? Is that a great thing that applications will have to think about these two different buckets of collateral differently and like how they interact on the rollup? In terms of like, Bitcoin holders though, I don't know when it plays out. I don't know, when the BitVM will work. We gave a grant to like Zero Sync. I think one thing I really appreciate about them is they're like, we don't need a token, we don't need a company. Like, we just want to make Bitcoin more expressive. And we're like, okay, we'll give a grant for that. So like, I think that's like very cool. In terms of will it work or not, I think it's like there's a lot of hatred from like, the OPCat crew on that. Just like there's a lot of hatred and Lightning for OPCat. People hate on like adding a ZKP verify opcode. So it's kind of like all over the place. It's like, what religion are you? What do you believe in? Even if you're like, does it work? Like people still might just like shit on it. So I think I'm in favor of the experimentation and kind of letting the market decide for us, because I really don't think you can like backwards into what the right design is. I think we're a couple more iterations away from the BitVM being efficient enough mathematically and small enough to fit on chain. I do think you'll be able to get like a more secure rollup than a multi-sig with it. And then I think it's like, what are the data availability costs you have to pay down to Bitcoin? How do those pass up to the user? Is it too expensive? I like the idea of adding OPCat though. I think I'm still a fan of that. It's just like, who knows when that plays out? I think our view is this will happen regardless, because people are going to fund it, people are going to build it, and encryption will, in the next decade or the one after that, get good enough where you could just like verify a snark with just a signature on Bitcoin using like really crazy encryption I don't understand at all. And basically you could have a rollup regardless. So like, might as well start thinking about this now and like working with it now and like competing on this vector now and adding this expressivity now. And, because the people are here who want to do it, and like, why alienate them? They're part of the community too, I guess.
Yeah. Do you think that like Bitcoin just immediately starts experiencing the same like interop problems then? I mean, maybe there's some like Ethereans who don't contend that this is such a big deal, but yeah, like I had a discussion prior with, John Charbonneau, and I was just like, we were talking like, it doesn't seem like it's very incentive compatible for these rollups to like build out all these ecosystems and then not try to silo users off. Right. And so I'm just like, it seems like that would be a similar construct. Go ahead.
Well, what did you think? Like, I know you're like, I think you're like a big centralized sequencer guy. You like love the user experience.
I mean, like it's not that I'm a big centralized sequencer guy. It's that I don't think that, like the thing is decentralized sequence, all of them, they're blockchains. Like you're just adding another consensus mechanism. And typically, if you want these to be really efficient, like I'm being very reductive here, but if you want these to be very efficient, like the consensus set is smaller. So now you're just dishing off sequencing to a sidecar. Everything's a sidecar. Everything's another blockchain.
Everything's alt.
Yeah. And so, I mean, it's not so much that I'm like pro centralized sequencer. I'm just like, I think that like from what people are selling as decentralized sequencers to like these being functional in practice in like a trust minimized or like decentralized enough way, there's like a massive chasm there still. And I don't even, I mean, like, you know, there's like a lot of pushback on this. I'm not saying anything revelatory, right? But like people will say like, oh, there's like incentive for all these chains to be interoperable. I'm like, there's just not. Like Arbitrum has a foundation. It has a company that sells equity. Like it's just like these are businesses trying to use Ethereum as like the settlement layer, and then they're trying to silo off apps and users. I just like don't see this being like this open, free, like interoperable market of rollups where, but like, so then also though, with regards to centralized sequencers, I think that I don't object. So like if users understand the trust model, I mean, look at Base. Do you think Base is going to decentralize sequencer? Like this is a massive, like
only if Arbitrum does it for them.
Only if Arbitrum does it for them?
No, I was kidding. No, I think that was a joke. I want to be clear. I have tremendous respect for people working on this stuff. It's much smarter than me. But no, I think like, you know, we have this view, and I don't want to get like too shilly on your show, Gwart, but like this is why Ethereum was trying to add sharding. And now they're like, okay, we're going to do rollup sharding. And like the DAO wrote a blog post about this, like execution sharding. And one of our ideas is this rollup called NIL, which basically does like ZK sharding. So instead of having like a fraud-proof game with watchtowers, which is like watchtowers inside of an L2, playing fraud-proof games inside of an L2, like insanely complex, right? Instead, you just like proof everything. And then like if you have like faster proving, which, you know, proving has gone a lot faster. If you look 3 years ago where ZKPs were, now, you know, Mina has like 5-minute block times because of its proofs. Now, you know, I used like this thing like end of last year, like 6 months ago. So it's probably even faster now. That was like, it was like ZK Venmo or something. It was like 9 seconds, right? So like these things are getting quick enough where you could like have a decent trust assumption that, you know, like it'll be live, the prover will be live, and prove different VMs to each other really fast. And that's how you scale it. And that almost looks like a traditional database where you have execution sharding where like this database is doing this thing over here and this database is doing this thing over here, and they talk to each other. But now they're like Byzantine fault tolerant. Now they can like, you know, they have failure models because they have like this mini consensus on top. And then it's like, how do you like parallelize read-write access, input-output access to the database? You have like parallelization. So I think like this gets solved. I don't think this gets solved at, you know, Arbitrum talks to Optimism, talks to blah, 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 blah. Oh, Ethereum's the like base sequencer. I think there's too much incentive issues there. But I think if one company is like, okay, like we're just going to make this thing beefy, and then we're also going to break it up in a way that they can all talk to each other and just like scale with demand. They can do horizontal sharding, which is how all databases kind of scale. Then I think it works. You know, I do think it works. And then it's just like this huge layer on top with like, you know, some shard in Paris, some shard in Berlin, and they're just like talking to each other fast. There's like failure models with these things, right? Like the government can come and turn this off a lot more easily in Paris, or in Japan. But like now I can exit with my Bitcoin if they piss me off, right? And now Bitcoin is like cheap enough and fast enough where I could use it in real payments if the merchant decides to start accepting.
I think that's like maybe like to round off like when you asked me about centralized sequencing, I think that's like, to me, it's like, look, if you have some version of unilateral exit, but it's a centralized sequencer, and also maybe like with some of these teams are working on like privacy solutions, like if you can make like private payments on an L2 and the sequencer is centralized, but like you have the ability to exit unilaterally, like to me, it's just like, there's always this like inclination in crypto people is like you hack on another blockchain and they're like trying to describe it as something else. Like, oh no, it's like it's a sidecar. It's like, okay, what does this sidecar do? Well, it builds blocks, right? Like, and this is the ongoing thesis, like because the value capture isn't owning the entire blockchain, right? Like same with rollups. Like, so I just look at this, but so this is why, like, at least for me, I'm like looking at Base. I'm like, dude, great call, like fantastic call. Keep that centralized, rake the money in, right? And this is but like it shows the business. I mean, it's not even that I'm like it's not that I think that this is like the version of like free open source software that I dream of. Okay, maybe like having Base run a centralized sequencer. It's not like this isn't like, you know, the end state for me. But what I do think it does, I think it exposes like where the incentive model like really lies. Right? It's for these people to own the right to sequence transactions and take the fees. And this is just like, this will never like, this will always overcome like some desire to like scale in this like open free like, you know, Linux-esque model. And so like maybe that's the difference for me. So yeah, all right, well I'll stop going off about this now. Let's finish off with like, where do you see Ethereum in 10 years? Where do you see Bitcoin in 10 years?
I think one of them eats the other one, and I think more likely than not Bitcoin just eats Ethereum, and I really do believe that. And I think like FX currency is, you know, the only reason an FX currency doesn't get, you know, the only reason I don't use the dollar or someone else doesn't use the dollar in Tokyo is because of capital controls. And like blockchains in their end state are going to have the same applications, and you're going to be able to use them anywhere in the world, ideally. So there is no capital control. There is no censorship. And in that world, it's like, okay, what's the best money? Can someone tamper with my Bitcoin issuance curve? No. Can Jerome Powell come in and crank up the heat? No. So I think that's where it is. How soon we get there, I'm not an engineer. I'll give you like $1 kind of guess. You know, I think like the first DeFi apps really took off 2017 to 2019, especially 2019. And that was 5 years ago. And now they're like much more efficient. They're getting a lot better. I think if you play this out another 5 years, like we're pretty far along. I think like there's a few open-ended engineering questions that'll take a while to get solved, but ZKP's helped that a lot with kind of the sharding stuff. I think data availability gets commoditized pretty quick, and that'll happen on Bitcoin eventually. And then you just need to solve some like MEV stuff. And then it's like, okay, then it becomes like this like vault lending, staking kind of war, right? And that's not really like Bitcoin or Ethereum wins. It's like pretty clear, like, you know, the one that doesn't inflate me is probably better. Because that's what. I think if like you know, Craig Wright really was Satoshi and we're all wrong, like we're probably fucked. No, honestly, I think it'd have to be like cataclysmic. The really like horrible view of the world though is just like Bitcoin struggles to get enough like velocity, or Ethereum gets enough velocity in itself so that the like price doesn't dampen enough where people actually use it as money. And then at the same time, the US dollar just goes on chain and we dollarize the world, and we never get rid of, you know, the US government's horrible like sanction practices, horrible surveillance, and all the things associated with that. I don't, you know, for the Ethereum one, I guess if something like fundamentally breaks a Bitcoin, if proof of work is really as unsustainable as everyone screeches about, which I don't really believe, but you know, I think in that world, if like staking is just a lot better, I really do think it would have to be like something in the consensus level, because the moneyness, you know, I think getting the risk-free, you know, earning yield is nice, but like eventually people wake up like, oh, I'm also having my value inflated away, right, with Ethereum. So even if it's slower, I think the only thing you can really beat it on is like consensus then. And then it's like, okay, staking is better than proof of work, which I don't really believe that. It would have to be something like that though, where like mining just becomes uneconomic at the margin, and then you have like huge instability in block confirmations, which is, you know, like Matt Weinberg wrote this really famous post, like Bitcoin instability without the block space subsidy from like 2016.
The other thing is, you know, in this paper, like he uses unbounded block size, I'm fairly sure. I'd have to go back and read that, but I'm pretty sure like he's assuming an unbounded block size, which makes a fairly large difference if you can jam infinite transactions in. The other thing too is I think like a lot of the projections, I'm just like giving it just ramble now, but like a lot of the projections of Bitcoin adoption, like it's like, well, yes, obviously if we only onboard like another million users, then it's going to fail. Right? Like there's a lot of like concern in that regard. And I'm like, yeah, like it'll fail. That's fine. Like if in 10 years, right, like there's no demand for Bitcoin block space, okay, then we tried, right? Like maybe it doesn't work, right? But like there's a lot of like projections out that use like current numbers, I would say, and in reality, we need like exponential growth. Like that is like that functionally must happen at some point, right? And so like to me, it's like, okay, well, I'm not gonna sit here and like stress about it. And I don't think like I really don't think that this like idea of like very large blocks or like large rewards versus like small rewards, like incentivizing reorgs and like this like feather fork stuff, like we don't know yet. I don't think we don't know yet.
I think it's like, is the system like rational? Like miners are rational. They don't want to like fuck up the chain too much because then people will stop using it. And that's like they have skin in the game just like stakers do. I think sometimes we look a little bit too much that like energy is very transient and stake is like long-term incentive. But it's also like if your name is Fred and you're managing a publicly traded Bitcoin miner and your whole business is Bitcoin mining and all of the people who work at your company own Bitcoin, they are long-term incentivized. Like they all own Bitcoin. So I don't think they'd like fuck up the chain too much, which is like, obviously it's like, that's a rationality assumption. I also just think it's like, if you think about like the game theory of mining, like you end up with all these little pools or a big pool with a bunch of proxy pools, but you end up with a bunch of pools that can do like reorg things or like cause feather forks, but owing to a certain expected value. Like the expected value of the block being reorged is, Alex is a little bit has like great explanations on this, but it's like the actual value of the block times like your expected ability to like reorg it. And that gives you like a threshold up to the point where you will still do reorgs. But like that breaks down under pooling logic where like if Ampool has now mined something, I'm not going to go try and reorg it. They have too much hash rate behind them. And even if it's Marathon, like they have 7%, like we saw this with, the rare sat in April. Like
I know. And like only one like minuscule pool even try. That's pathetic. That's what I'm saying.
And that'll break down. I think Matt is totally right. Like this will break down in the future. Like it'll get worse, but it'll still freaking work. Like eventually we'll have confirmation eventually. And that's what's like Nakamoto consensus. You can be like, why is it the best consensus? And it's like, no matter what happens, like eventually Bitcoin finalizes.
So true. So true. Yeah. Bars.
Oh yeah, brother.
All right. I think that was a great note to end on. It's like quite inspiring in my opinion. You got anything else you want to add? Did we not touch on anything? You're like a little bit like non-committal on like throwing people under the bus, which is fine. I understand you have a reputation to keep up. But did we not touch on anything?
Are you asking if I have specific people I'd like to throw under the bus now that we're wrapping up?
That was an option, certainly.
I think, like everyone's just doing the best they can, and there's certainly some snakes out there, but that's true in any industry. And the nice thing about crypto is you can just own whatever you want anonymously and just, tell people to F off.
Very empowering. Very empowering. Well, thank you, Walt. That was a great conversation. I appreciate you coming on.
Thanks for having me, man.